Hey folks, it's Simon here with your Tau Daily for Friday the 24th of January 2025. Happy Friday. The S&P's made a new all-time high on Thursday on an intraday and closing basis. The index finished up about 0.5%, and what was encouraging was more stocks rose than fell, so breadth was positive, and you can see here all 11 S&P 500 sectors finished green on the day. It wasn't just reliant on the Mag 7. In fact, the Mag 7 had a pretty quiet session overall. So where does that leave us now? Well, there's nothing bearish about a symbol or a stock market that's at all-time highs, because what happens when an index is at all-time highs or a stock, there's nobody sitting there thinking, oh man, if this thing can just rally to 620, I'll be able to unload my bags and not make a loss. Everyone's looking at it and they're either thinking, I wonder how high this can go, or they're thinking, dang, I haven't got enough exposure, I need to buy the next dip. All right, so it creates a bullish sort of an environment. Now, that's not to say that the S&P is going to go up in a straight line. We've got a new president. We're likely to see a whole bunch of headlines over the next few weeks that will create volatility and uncertainty. But I do think we're in an environment where you want to buy the dips. Now, I said yesterday I was open-minded to the possibility of a wiggle lower, and I use the term wiggle deliberately. I don't think we're headed for a big crash here. I think, if anything, we're just looking for perhaps a kiss goodbye of this trend line, or maybe even just a pullback to the mean. But again, I think we're in an environment where you want to buy those dips. I'm not hedging. I'm not rushing out and trying to short the market, not by any stretch. But I've also got to acknowledge that right here, right now, is not the optimal time to be getting max long either. Now, I've been continuing to highlight the US dollar, potential trend change there. It's continuing to work its way lower. You can see the momentum bars here have turned red. We're starting to get some moving average crossovers. It looks like the path of least resistance could continue to be lower for the dollar, and ultimately that would act as a tailwind for stocks and other risky assets. We've also got earnings season really heating up over the next couple of weeks. We'll see all of the big tech earnings over the next 2 weeks, and it's uncommon to see the market sell off into big tech earnings. Something of a sell-off after big tech earnings is absolutely on the cards. That's the fangover that I talked about yesterday. But like I said yesterday, we don't have to worry about that really until mid-Feb. That's what I got for you today. I hope it helps. I hope you have a wonderful weekend, good trading, and I'll catch you next week. Thank you.